According to Wikipedia, there are 42 recognized candlestick patterns that can be split up into simple or more complex formations. And undoubtedly, if you're a beginner trader, you've probably already been introduced by all the weird and wonderful names that typically go with these formations. That could range anywhere from shooting stars, inverted hammers, bullish, bearish, engulfing candles, and there are even more weird and wonderful names out there. But I'll let you discover that. What I'm trying to do in this video and show you as a bit more of an advanced, let's say, experienced trader, that although candlesticks do, or candlestick patterns do have their place in technical analysis, that it is often a better idea to use them in context of what they're trying to tell you with other analysis tools such as indicators, or in some cases I use market geometry to see whether these, or where these patterns occur, whether they actually carry more weight or actually really trying to tell me something. But what I mean by that is, if you look at this chart, for example, here of the ES, it could be on any time frame. It's a time-based chart, obviously seeing the candlesticks here. And there are quite a few instances here, for example, where we have bullish engulfing candlesticks. And in this case, it shows a bullish move to the upside. And there's quite a few of them after little pullbacks. We get these bullish engulfing candles. Now, it could be a different formation. I'm just using an example over here, right? So pretty accurately, even during this move to the downside, a little bearish engulfing candle over there. And price starts moving down to the downside. But also in between, a lot of these movements, either during sideways movements, you can find instances where you get some of these candlestick patterns pop up and they really didn't affect price much. Price didn't really move much. It might be a bullish sort of candlestick formation, but instead price ran sideways. So like I mentioned, it's very important that you look at candlestick formations in context with other analysis tools like indicators, or let's say, let me give you an idea, for example. What I'm trying to say by that is where they form is also very important. All right, so let's look at this move to the upside here, for example. Let's say we've had, okay, price moving up on the ES. I draw a channel from low to high. And we use this 3 points over here. Price moves all the way back to the upside, nearly touches it again. Let's assume for the explanational purposes that price did touch that bottom of that channel perfectly, and all of a sudden you get a bullish engulfing candlestick. Now that, in my opinion, would carry more weight than a bullish engulfing candle that sort of formed in the middle of nowhere. All right, since price actually came into an area that has more relevance than simply looking at a chart on its own. In this case, an angular support line, in my case, a channel, which might act as support. All right, so this is just a very, very simple example. So what I'm also really trying to say is don't get carried away with all of the patterns that are out there. You get traders that will focus on a very few particular ones, but really it's up to you. I can't tell you what to do. But bullish and bearish engulfing candles are some of my favorite. You probably heard about dojis. Dojis tend to form when there's a lot of indecision, like here. There's ones over here and here. But again, they can form all over the show. So though any candlestick on its own, or candlestick pattern, whether it's a formation consists of 2 candles or 3 candles, whatever the case might be, if they do form around about areas of, let's say, like channels, previous highs and lows after a retest, or whatever the case might be, they carry more weight than just simply forming in the middle of nowhere. All right, so they should be used in combination with other analysis techniques. One of my favorite ways to also incorporate candlestick formations with my analysis is also to look at volume. I particularly like using the Ninjacators volume delta histogram, which looks at the net volume up or down for any particular candle, and it quickly displays where the buyers and sellers were in control during a candlestick formation. So let's say, for example, we had this move higher here, this nice green candle after a little bit of a pullback. It was a bullish engulfing candle, meaning that the candle's body was way bigger than the preceding one, We had a red candle immediately followed by a very long-ranging candle with a green body that engulfed the previous candle's body, accompanied by a clear increase in buying pressure, if that makes sense, right? So that sort of, how can I say, filters out the candlestick patterns that's got the most or highest likelihood of actually reversing the market, or whatever it is you're trying to achieve or looking for. All right, so that's a really good example of a bullish engulfing candle accompanied by an increase in volume. We have another one over here. Huge increase in volume delta. And you can find these all over the show. I think there was a recent example when I want to show you something of how important volume delta can be, is this example over here. And you can see that price during the overnight session on the ES has been trending lower and lower into a low. There's been quite a lot of sell volume into this low, right? Then we get a red candle followed by a bullish engulfing candle. That one over there. I hope you can see that. But since price was in a downtrend, and rather than just thinking price will reverse and start a new uptrend, yes, there was a little bit of an uptick in price afterwards, again just on a 5-minute time frame. But look at what happened here with the volume. On that candle there was very neutral, telling me that there was a tussle between the buyers and the sellers, and none of them actually came out as the clear winner. Again, shown by my volume delta histogram. So you can't even see a little peak here on the histogram there. Hopefully you can see that it was pretty much close to zero. So although this was a bullish engulfing candle, it would have, for example, not been one that would have interested me if it was part of a strategy, right? Because simply it was showing that, yep, the candle printed, but it wasn't accompanied by a lot of volume. All right, so that concludes today's video. Just a quick recap. There are so many different candlestick patterns out there. If you are a beginner trader, by all means go and study them. They do have a time and place in analysis, but as you know, a lot of traders will probably incorporate them as part of a strategy and also use different analysis techniques like additional indicators, or whether it's market geometry or whatever they like using, to use them in combination with candlestick patterns and not use them solely on their own. Right, thanks for watching, and I'll see you in the next one. Take care and goodbye.